It is 9:33 a.m. Pacific Daylight Time. It is the 20th day of May. God, this year is just zipping by, dude. 2025. And this is episode 1098 of Bitcoin and Australia will be in today's news, as well as Franklin. I guess Franklin Templeton, but we'll just say Franklin for now. They're extending some idiocy. We'll see if it works for them, but honestly, I want to talk about this particular thing as a trend that I think is sort of like a riding the coattails of what Michael Saylor has started. It's different than what you think it is, but we're going to get into that one. There is a lawsuit against Coinbase on biometrics, and yes, we are going to dive into the Steak and Shake business because I think there's some things here that we need to look at. I really do think about that. Then the yield numbers are out of control on the treasury bonds or bills or whatever the hell you want to call them. They are not doing what people want them to do. We'll talk about it. There are 3 companies that have bought Bitcoin last week, and 2 of them one of which you do not. And then we're going to talk about El Salvador because it looks like their continual thumbing of their nose at people like the World Bank and the IMF is paying off in a big way. What else have we got? Oh, yes. And the aforementioned Mr. Saylor, well, strategy and the co-founder Michael Saylor they're both being sued. Let's start, though, with Australia. Let's get down under, ladies and gentlemen, with Ezra Reguera. Cointelegraph Australian court ruling could lead to $640 million in Bitcoin tax refunds. Yeah, didn't see that one coming. Was not on my bingo card that a court decision in Australia could open the door to as much as $640 million in capital gains tax refunds on Bitcoin transactions after a judge ruled that crypto should be treated as money rather than a taxable asset. Because on May the 19th, the Australian Financial Review reported that the decision arose within a criminal case involving federal police officer William Wheatley, who allegedly stole 81.6 Bitcoin in 2019. And at the time, those assets were worth roughly $492,000. But at current market prices, that's now valued at more than $13 million. In the case, Judge Michael O'Connor of Victoria ruled that Bitcoin qualifies as a form of money rather than property, likening the digital asset to Australian dollars rather than shares, gold, or foreign currencies. This interpretation could set a legal precedent, potentially placing Bitcoin transactions outside of the scope of Australia's current CGT, which is capital gains tax regime. In an AFR interview, tax lawyer Adrian Cartland said the verdict totally upends the Australian Taxation Office's current position. And since 2014, the ATO has classified crypto assets as CGT assets. Well, this now means that users must pay tax when selling or trading them. Under the ATO's guidance, any disposal of Bitcoin, including selling it for fiat, exchanging it for another cryptocurrency, or using it to purchase goods and services, constitutes a capital gains tax event. And this framework has been the basis for taxing cryptocurrency transactions in Australia for well over a decade. However, the recent ruling challenges the approach by suggesting that Bitcoin functions more like a money than a property, and this potentially will exempt it from capital gains tax in Australia. Cartland said it was held that Bitcoin is Australian money. Quote, that is, it is not a CGT asset. Therefore, acquisitions and disposals of Bitcoin have no tax consequences, according to the tax lawyer. If the ruling is upheld on appeal, Cartland estimates that there could be potential tax refunds totaling 1 billion Australian dollars or 640 million US dollars. However, while Cartland thinks there could be up to $1 billion Australian dollars in refunds, the ATO said there were no official figures that confirmed the amount to be potentially refunded if the case changes how Bitcoin is taxed in Australia. The only thing that's going to come out of this is possibly, and that's if it wins on appeal, because if some authority somewhere in Australia is going to appeal this ruling because of what it means. They do not want a precedent set that means that you can just spend your Bitcoin willy-nilly without giving a cut to the Australian government as, I don't know, tribute or whatever they're calling it nowadays. Second thing is, these people are never going to see any tax refunds whatsoever. It's just not going to happen. But if it wins on appeal, if this judgment is upheld, when the inevitable appeal comes, then it will set a precedent, at least in Australia. However, other countries will be able to, in their own court systems, will be able to say, look, it's not precedent here in our legal system, but we can't just dismiss it. And then they will take the arguments from this case. They will reform those arguments to fit their particular legal frameworks, and they will start making arguments in the same way. That's if this wins. And we're talking about Australia here. This is a tough cookie to crack here. The Australian government isn't exactly, well, it's pretty much a socialist country at this point. I hate to say it, and for all my Australian friends out there, nothing against you guys personally, but your government as well as my government, they all suck ass. So the only thing that we can hope for out of this Australian business is that we do actually set a legal precedent that at least one major Western country is not going to regard Bitcoin as property. They're going to regard it as money. We're going to have to wait and see. And if I'm really, really lucky, I'll be able to catch the story when that comes out. And if I do, I will bring it directly to you. If for whatever reason I miss it and you guys pick up on it, please, 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 for the love of God, make sure that you tell me all about it so that I can bring it to everybody else here at the Bitcoin and podcast. Now, Franklin taps blockchain to offer yield on idle payroll funds. As if you didn't think the stupid would be able to permeate any further into the ether. Well, yes, we're going there with Amin Hasquanis from Cointelegraph, who writes, Franklin, a hybrid cash and crypto payroll provider. Not Franklin Templeton. Okay, good. This is good. Franklin, a company unaffiliated with Franklin Templeton, which is a hybrid cash and crypto payroll provider, is launching a new initiative that aims to turn idle sitting payroll into an opportunity for, you guessed it, yield. The new solution, dubbed Payroll Treasury Yield, uses blockchain lending protocols to help firms earn returns on payroll funds that would otherwise sit idle, the company told Cointelegraph. Franklin said that its new offering integrates summer.fi. I'm telling you, I'm reading this to you for a reason. It's not because I'm a shitcoiner, I promise you. Summer.fi, a decentralized finance lending platform, allows companies to deposit stablecoin denominated payroll reserves into smart contract lending pools. What could possibly go wrong? These funds are then lent to vetted borrowers, and companies earn yield while retaining access to their capital. Companies maintain full custody throughout the process, and smart contracts used are audited to reduce risk. Quote, the problem that Franklin solves is, twofold. Megan Nab, founder and CEO of Franklin, told Cointelegraph. For companies that have already integrated crypto into their balance sheets, Franklin helps them use those assets to manage their operations. But for the broader market, we're enabling business models of the future, where money moves instantly and more intelligently and to be more global, Knave added. Franklin said the new offering is an alternative to traditional treasury tools like sweep accounts or treasury bills, which often involved operational complexity and limited returns. Furthermore, it differentiates from earned wage access platforms, which enable employees to access their earned wages before their scheduled payday by avoiding additional debt and associated costs. Quote, traditional payments in the next decade will run entirely on public blockchain rails as a wholesale replacement to ACH and SWIFT systems, Knave said. She added that if on-chain payroll products go mainstream, banks could fade into the background. While technology may replace many banking functions with self-custodial tools and smart contracts, regulatory frameworks will still require accountable legal entities. The result may be zombie-like institutions, banks in name only, existing to meet compliance rules but playing a minimal role in actual payment processing, Knave said. However, decentralized lending comes with risks like smart contract vulnerabilities and market fluctuations. Now, Franklin said it aims to mitigate these by using Summer.fi's audited contracts and over-collateralized lending. Interest in yield-generating strategies within the cryptocurrency sector has surged because of stupidity. Surged in recent years, driven by both retail and institutional investors seeking to maximize returns on their digital assets. And on May the 16th, Solve Protocol launched a yield-bearing Bitcoin token on the Avalanche blockchain, giving institutional investors yet more exposure to yield opportunities backed by real-world assets, or RWAs. Then, on May the 1st, Ryan Chow, co-founder of CEO of Solve Protocol, said that the demand for yield-generating strategies around Bitcoin is surging, especially from firms seeking liquidity without liquidating their BTC. Again, I ask you, ladies and gentlemen, what could possibly go wrong by lending your employees' payroll out to generate yield? This is a backbone of a company crushing situation. This isn't just about walking all over retail like, BlockFi did. No. We're going to go after the big kahuna now. We're going to screw up entire companies being unable to make payroll because they were seeking yield on idle funds. I'm not even sure if this shit's legal. From the company standpoint, I'm not even getting into Franklin. I don't care if what they're doing is legal or not. I'm talking about the fiduciary commitment of the people in charge of the company and the company's funds, and that includes the company's payroll. I'm not sure if this shit's legal. I'm not sure you can leverage payroll, which is promised to your employees because they have worked hard, hopefully, for you to make you a profit, and this is their compensation. You're gambling your employees' compensation, all of their compensation, including your own if you're getting payroll checks from your own company. Some people do, like some CEOs do get paid directly by the company as part of payroll. Other people get paid and compensated in slightly different ways, but I would gather that the vast majority of every single officer and every single employee, from the CEO down to the guy that cleans the toilets, are on company payroll. And if you're going to gamble that because you're seeking yield, then there's only one thing that's inevitable. Franklin's going to go bankrupt, or they're going to get sued, or something horrible is going to happen. And your payroll, even though that they say, oh, well, the company keeps custody of the payroll. Oh, bullshit. That's bullshit. Then you're just, at that point, you are literally playing with fake money. And you'll say, well, we do that anyway. Well, yeah, I know. I get that point. But this is This is different. And this is one of the reasons why I wanted to bring you this story today. It's not because I'm all about DeFi. DeFi is stupid. It may be later on when there's less people that are scammers and more people that are actually at least trying to attain the title of being honest, then maybe it will have some usage. But right now, we are right back to 2019, 2020, and 2021, when BlockFi was making loans against people's shit and then basically folding up, going tits up, just when FTX and Alameda Research and everybody else just died. Right? This is no different. We are right back to 3 years ago. And nobody's learned a single freaking lesson. 4 years. 4 years ago. 4 or 5 years ago. It's only been 5 years and nobody has learned. And it's not that they haven't actually learned. What they understand, what people like this, behind schemes like this, what they understand, and they may have all the best intentions in the world, but they're not going to survive reality. And the reality is this. The people behind these schemes are looking at the rest of the field and saying they still don't get it yet. We still have the chance to be able to rope these dipshits in and get yield on their money instead of actually going out and making our own money and then getting yield on that. No, they want to take a cut of the yield that they promise you on an instrument that they just conjure up out of thin air. Stay as far away from this as possible. And if you are an employee and you find out that human resources and payroll is even contemplating this, you need to make some noise because it's your payroll that's on the line. Now, moving on to the lawsuit against Coinbase. Apparently, a lot of people don't like having to have their face scanned in a biometric fashion because this lawsuit against Coinbase is exactly for biometric privacy violations in the state of Illinois here in the United States, where, according to plaintiffs Scott Bernstein and Gina Greeter, as well as James Lonigan, in the lawsuit filed on May the 13th in a federal court, Coinbase's indiscriminate collection of facial biometric data for Know Your Customer requirements breaches the state of Illinois' Biometric Information Privacy Act, also known as BIPA. The group argued that the exchange failed to notify users in writing about the collection, storage, and sharing of their biometric data, as well as the purpose and retention schedule for those data. Quote, Coinbase does not publicly provide a retention schedule nor guidelines for permanently destroying plaintiffs' biometric identifiers as specified by the BIPA, they alleged. The complaint claims that Coinbase requires users to verify their identity by uploading a government-issued ID and a selfie, which is then sent to third-party facial recognition software to scan and extract facial geometrics. This process captures biometric identifiers without the user's informed written consent, thus violating BIPA, according to that lawsuit. Additionally, the group alleged that Coinbase unlawfully shared that biometric data with a third-party verification provider such as Jumio, OnFido, Authentics, and Solaris without users' consent. Quote, Coinbase obtains biometric data in violation of BIPA because it explicitly directed the third-party verification providers to use its software to verify and authenticate users, including plaintiffs, and its software does so by collecting biometric data. The group also stated that over 10,000 individuals have filed arbitration demands on these issues with the American Arbitration Society or Association, but Coinbase allegedly refused to pay the required arbitration fee, causing the claims to be dismissed. Wow, that's nice for arbitration. That bodes well, right? But regardless, the lawsuit brings these 3 counts of biometric privacy law violations and 1 count of consumer fraud, straight up consumer fraud, under the Illinois Consumer Fraud and Deceptive Business Practices Act, and the group seeks $5,000 for each intentional or reckless violation, $1,000 for each negligent violation, along with injunctive relief and litigation costs. Coinbase was also recently hit by at least 6 lawsuits following the May 15th disclosure that some of its customer support agents were allegedly bribed to leak user data. This does not look good for Coinbase. And they're probably going to lose this case, at least the case for Illinois. And for those of you who are going, oh, well, $5,000 for, intentional and reckless violation plus $1,000 each for negligent violation. Yeah, well, and that's not a whole lot of money. Well, multiply that by 10,000 at least, and there's probably going to be a lot more that on board because this is a class action lawsuit. So every person, if it can be found that for every person on that list in the class action lawsuit had an intentional or reckless violation against them and a negligent violation against them, then each person will be compensated for $6,000 apiece. And of course, the lawyers will get at least 1/3 of that, so $4,000 apiece, whatever, right? The whole issue here is that Coinbase has been doing this for years, and it's just now that Illinois noticed. I find that a little odd. But then again, maybe it was because the flames were fanned by the fact of that May 15th news where Coinbase got, hit with this. And it wasn't a hack. I said this before. If you're going to pay people slave labor charges so that you can save $1 on your bottom line, and believe me, I'm a capitalist. But at one point or another, I'm a solid capitalist, which means, well, what's the risk reward of paying shit wages? And the risk is the fact that somebody can pay that same person more to give me access to the data that they have access to. That's a calculation that any sane capitalist would actually have to make. But in Brian's case, the CEO of Coinbase, I don't think he makes those calculations, and I don't think anybody else does at that company either, because they would have realized saving that much by paying people slave labor because they're using third world country people for customer service, their payout of $400 million, that decision of using slave labor to save money actually cost them more money in the end. That's why I'm an actual capitalist. I mean, you're just a socialist. You don't want anybody to make any money. I want people to not lose their money, and I also don't want people to lose their trust in their customer base, because where do you think the money comes from? And you can't be screwing up like this. And that may very well have been the last straw for a couple of lawyers in Illinois to say, fuck it, let's go. Hell, might as well fog of war, because they got like 10 lawsuits filed against them just for the May 15th thing. Now we got the state of Illinois just piling on and saying, screw it, let's LFG, brothers and sisters. Let's move on to some good eats, where Steak and Shake is accepting Bitcoin, its effects on retail and e-commerce. Ethan Berlint has it for Bitcoin News. Yes, we talked about it on Friday. I get it. But now that the dust is settled and we've actually seen some receipts coming in, let's kind of examine this a little bit more, shall we? Let me just set something up. I just want to make sure that I've got this remembered, just so that I know. Okay, there we go. Now we can do it. So, Ethan Berlint from Bitcoin News is writing this one, that Steak and Shake recently made headlines by officially accepting Bitcoin payments, via the Lightning Network, across all, not part, but all of its United States locations. The integration of Bitcoin payments at over 500 locations is a monumental moment for both the fast food industry and the broader retail sector. This is not just something that Steak and Shake is testing in a handful of locations, they're doing it full scale, fully embracing Bitcoin. With more than 100 million customers a year, Steak and Shake's integration of Lightning makes it easier than ever to use Bitcoin in a day-to-day life. Buying a burger and a steak with sats, that's now a real option, and the process is straightforward. Customers simply scan a Lightning QR code at the register, completing their payment in seconds, while Stake and Shake receives instant USD conversion, ensuring price stability and ease of use. So what does this mean for Bitcoin and e-commerce? Well, for starters, Stake and Shake becomes the first of eventually many to fully embrace a digital world. As Bitcoin continues to grow, consumers will continue to realize the benefits of saving in a currency that is truly scarce and decentralized. That's a huge step forward for Bitcoin, as it shows that it is not just for holding, it's for spending too. And by using the Lightning Network, Stake and Shake is helping prove that Bitcoin can scale for everyday transactions. This now creates a seamless checkout experience, making Bitcoin a viable alternative to credit cards and cash. And more importantly, it signals a significant shift in mainstream attitudes towards Bitcoin. As a well-known brand across America, this move serves a powerful endorsement, likely to influence other chains and retailers to consider similar integrations. Accepting Bitcoin as payment can open the door to new demographic or tech-savvy, financially engaged consumers who prefer digital assets. As we all know, companies that adopt Bitcoin receive a fascinating amount of love from the Bitcoin community, and I would assume Stake and Shake will be receiving the same amount of attention. Yeah, pausing just to say they are. From a business perspective, accepting Bitcoin has become more than just a payment method. It's now a marketing tool. It sets your business apart and gets people talking about your business. And in a crowded market, that kind of edge kind of matters. Stake and Shake's embrace of Bitcoin is likely to accelerate the adoption of digital assets in both physical retail and e-commerce. As more businesses witness the operational and marketing benefits, industry experts anticipate a ripple effect that will increase interaction between consumers and digital currencies, further regulatory clarity, and bring continued innovation in payment technology. Yay! Stake and Shake's nationwide Bitcoin payments rollout is more than a novelty. It's a pivotal development for digital payments, setting a precedent for other retailers and signaling the growing integration of digital assets into everyday commerce. Okay, there's a couple of things here before we move on. I want to say this. This whole thing about accepting Bitcoin as a payment can open doors to new demographic of tech-savvy, financially engaged consumers who prefer digital assets. There's a bit. It's not that the author is confused, but I'm starting when I see things like this, I automatically, I start thinking about this whole thing about we keep telling people that you want to hold Bitcoin, you want to save in Bitcoin, and I think one of the things that has happened to the financial literacy of many people in the United States is that if you're saving, that means that you're not spending. You've got to save and I think that this is a feature of what happens when you completely destroy a fiat currency. And the people that, used to be able to rely on it have forgotten what its use is. It's for saving and spending. You save in the money that you intend to spend. One of the problems with Bitcoin is that it has a tendency to go up quite a bit. And yes, it also has a tendency to go down. But I think people, moreover, I think what really is driving this I don't want to spend that which I save in is that they keep seeing it go up. We've never seen this before. Not really. But gold holders will say, well, we've been experiencing it forever. Yeah, but not like this. This is like orders of magnitude difference, right? And nobody takes gold. I can't go to a Taco Bell and give them an ounce of gold and say, I need 2 burritos. How are they going to make change? They're not an exchange window for gold, right? Nobody, and I can't shave off. They don't have a gram scale at Taco Bell. No, I try not to eat at Taco Bell. I'm just using it as an example, but I'm not going to go in there with a knife and shave the edge off of a Krugerrand, gold ounce, and then how 0.5 grams of gold will get me a taco. Nobody does that shit. But Lightning makes it really easy to do this. And I think we're going to see is some short-term to mid-term, for lack of a better term, confusion as to whether or not people should spend their Bitcoin. I do. I do. I spend Bitcoin. I do it quite frequently. And people who, you're dumb. Well, I'm at one point or another, I'm going to die. I still need food. I still need to pay, electricity bills. I'm good with it. I mean, sure, I wish I didn't have to, but sometimes I do have to. But it doesn't mean that I'm not going to just stop myself from doing it. But I think this is a major friction point, is this concept of saving and then spending that which you save. Is it, well, are we spending or are we saving? And I think that friction was caused by the breaking of fiat money. But here's the other thing, is that I've noticed this on a couple of these receipts that people took a bunch of pictures of over the weekend, but them going to Steak and Shake, and they were taking pictures of their receipts. And I've seen at least a couple that at the bottom, it says it has a certain amount of information, and everybody's like going, "Oh my God, look at this! It's paid in sats." It says right here, amount paid 4,953 sats, and everybody was looking at it. But below that, it gives an exchange rate of $1. This is on the printed receipt from Steak and Shake. It gives the exchange rate at the time of purchase of $1 to however many Satoshis and like a fair amount of decimal points that don't make any sense to me, but I won't get into that right now. The point is that everybody's looking at this, that on the receipt, it says the amount paid in sats. And then there's this exchange rate. But below that, it has the words fiat amount. And that was the important one, because I've never seen that on any receipt ever in my entire life. It just says, it'll say like $10 USD. Amount paid, $4 USD. Amount paid, 3.00 with a dollar symbol in front of it. That we're all used to. But I don't think anybody's ever seen, especially from a dyed-in-the-wool American company that is a corporation that has point-of-sale machines that generate receipts in printed fashion, where very clearly and very legibly written is fiat amount. 10 years ago, if you used the word fiat, nobody would know what the hell you were talking about, like at all. And now it's on Steak and Shake receipts. Now, somebody came back and said, yeah, well, that's just what this particular NIM, had on his, in his wallet. And I'm not sure how that actually works. And what I mean by that is, I think what he's trying to say is that this information that I'm reading to you was somehow or another added to the receipt by the fact that somebody had programmed their wallet to actually send that information to the receipt. I don't think that that's actually what's going on, because I've seen more than one receipt actually say this, and it's not the same guy. So I am still looking into this, but I find it fascinating that if 100% true, this will be the very first time in the history of receipts that people get when they spend their money on goods and services that it's written as they spent fiat dollars. I think that's really interesting. Let's run the numbers. CNBC futures and commodities. West Texas Intermediate oil is up 0.8% to $62.99 a barrel. Brent North Sea up 0.2 of a point to 65.54. Natural gas tanking 6.21% to the downside, and gasoline down 0.4% to $2.13 a gallon. All of your shiny metal rocks are doing very, very well this morning, including, and at almost the top of the stack, gold 1.5% to the upside, 32.35 and 5 dimes. Silver is up 0.6%. Platinum is up 1.5%. Copper is up 1.7%, and palladium is up 2 1/3. Most of ag is in the green today. The biggest winner is going to be coffee. Yep, 2.71% to the upside. Biggest loser today is rough rice, 0.8% to the downside. Live cattle is up 0.5 point. Lean hogs are down 0.6. Feeder cattle up a mere 1/10 of a point, while the Dow is up 1/3 of a point. And S&P is up, well, actually it's crab walking itself sideways, 0.04%, but in the green. NASDAQ is down 0.03%, but in the red, and S&P is down almost a half point. Now, Treasury yields are out of control, and it's actually kind of frightening, at least to the people at Treasury, the Federal Reserve, and Trump is going to be walking all up and down Jerome Powell for this one, because the yield on the U.S. 30-year Treasury bill crossed 5% for the first time since last April, reaching an intraday high of 5.011%. And this move comes in the wake of Moody's downgrading United States credit. We have been stripped of our AAA rating due to mounting deficits and escalating interest expenses. Ladies and gentlemen, it is a straight shot to the bottom of the third world countries from here. Let's see how fast we can go, because the last time the long end of the yield reached 5% was April the 9th during the so-called tariff tantrum, which triggered sharp sell-offs in both crypto and U.S. equity markets. Now, at the time, Bitcoin was hovering near its local low of around 75,000. Of course, it's since rebounded, and strongly, because it's at about $103,000 to $105,000. The last time the 30-year closed at or above 5% was October 31st, 2023. The highest closing yield in recent memory was 5.11% on October the 19th of 2023, the highest since July of 2007, which was nearly 18 years ago. The current yield is just 12 basis points away from surpassing that milestone, said Jim Bianco, head of Bianco Research. In addition, the United Kingdom surpassed China in March to become the second largest foreign holder of U.S. Treasuries, with holdings totaling $779.3 billion, trailing only Japan, which remains the top foreign creditor. Both China and Japan have continued to reduce their U.S. Treasury holdings over the past 12 months, underscoring the growing need for the U.S. to attract new buyers for its shitty-ass debt. As the U.S. Treasury faces growing deficits with the potential of more bonds being issued, because they always issue bonds, increasing supply, and thereby pushing yields higher while prices will fall. Meanwhile, NASDAQ futures are down around 2%, blah, 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 blah. Okay. So the real news here is that they cannot get the yield under control. And this is going to fuel the fire for Trump in being able to say, Jerome Powell, if you do not reduce yields, we're going to have a real issue, and you're going to be the center at it. And don't make any mistakes here. Orange Man is the best, probably one of the best marketers you've ever seen. You may hate him. You may love him, you may be neutral on him, but one thing he is very, very effective at is telling a story. And for those people, oh, well, he went bankrupt. I'm looking at Mar-a-Lago. I'm looking at several golf courses. I'm looking at several high-rise 5-star classed hotels. I'm looking at restaurants. And I still can't find a situation where whatever bankruptcies he's gone through seem to affect his wealth. Because people go, oh, well, now he's poor. I'm sorry, I missed that. I don't think that that's actually the case. What I'm getting at here is that he's successful, whether you love him or hate him. And he's successful. One of the reasons why is because he can tell a story, because he understands marketing. He understands how to get a message across. He understands delivery. He understands venue. He understands the whole fucking thing. And if you think he doesn't, well, I feel bad for you, because it's very clear that he does understand all this. And if he's got, and he already does have, Jerome Powell in the crosshairs, all he needs is to show a graph like the yield curve that we see today to further inflame and fan the fire of getting Jerome Powell and putting pressure on his ass to do something at the very next Fed meeting. Now, it's possible that something can break in the next 24 hours to sometime this week that will cause the yield to go back down. But right now, it's not looking good. It's just not looking good. But Bitcoin is looking fair. We hit a new all-time high today. Or sometime yesterday, I think we hit $107,000 and immediately got rejected off that son bitch. And we went all the way down to 102,000. And now it looks like we've got some buoyancy at 105,120. That is a $2.09 trillion market cap. And we can get 32.3 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,866,753.97 of. Average fees per block are slightly elevated at 0.05 BTC, taken in fees on a per block basis. Looks to be about 22 blocks waiting to clear with 40,800 unconfirmed transactions. High priority rates, 11 Satoshis for V-Byte, so it's kind of expensive right now, although honestly, it's really not that bad. 7 Satoshis is going to get you in for low priorities. And mining, we had a difficulty adjustment. We ended up with a 2.13% adjustment to the upside. We are now looking at a half-point adjustment to the downside, coming in 1,705 blocks, roughly 11 days. Currently, the hash rate sits at 850.5 exahashes per second. Not too shabby. A reminder to go to bitcoinandshow.com. That is Bitcoin and Show, all one word, bitcoinandshow.com. Sign up, give me your email. I promise I'm not going to give your email to anybody. I'm not going to sell it to anybody either. It's mine. Well, it's yours, but you're giving it to me, and I'm going to not do something stupid with it like sell it or give it away. It is a new website. Just trying to get it a little bit of traction. All of the episodes are like there's like write-ups for all the episodes, all the show notes are there. And each one has a URL directly to fountain.fm. I have asked fountain.fm if they are going to have an embedded player, and they said they're working on it. And as the minute that fountain.fm comes up with an embedded player, I'm going to slip that in there instead of making you go to fountain.com. But Podcasting 2.0 is very new. Fountain is right on like one of the heads of the serpent on Podcasting 2.0, and I want to support them. And that's why whenever I release, a show, I'm always pointing people to fountain.fm, which is subsequently why 66% of my listeners listen to the show on fountain.fm. But please, please, please go to bitcoinandshow.com and sign up. From Stake My Shake, Friday's episode of Bitcoin, and I gotta say, congratulations to our brother-in-arms, Pies, who is tying the knot. He got engaged over the weekend. Tell Pies how much, how much you give him congratulations, send well-wishing, do all the things, shake all the hands, provide Pies with all the memes. Please, please, please welcome to what is soon to be our newest married guy. From Progressively Worse, 1000 Sat says, let's start this week on the right foot. Much appreciation for the work that you continue to do. Thank you. No, thank you. Psyduck with 700 says, Psyduck. Turkey with 500 says nothing. Progressively Worse with another 500 Sat says, Psyduck. Yodel with 444 Sat says, great ways, have a good weekend. Permanerd with 333 says, you may think this podcast is about Bitcoin. However, it is actually focused on NunyaBidness trying to read terrible grammar. Give it a listen and laugh with me as he stumbles over the verbal diarrhea that now passes as editing. The podcast pairs well with Oshi bars. Apparently they taste so good, you don't even have to be high to enjoy them. Use the promo code Bitcoin and to show some love. Yes, that is correct. Please do show some love. Now actually that's it. Oh, I'm so sorry. I came to the end of that. I didn't even see it. That's the weather report. Welcome to part 2 of the news you can use, where we will continue to sort out and figure out how to fix terrible grammar maybe it will not come from Bitcoin Magazine's Jenna Montgomery, who is writing that Abraj Restaurants becomes first Bitcoin treasury company in the Middle East. And it's a restaurant group. Today it was announced that Al Abraj Restaurants Group BSC has now become the first publicly traded company in the region to adopt Bitcoin as a treasury reserve asset. The Bahrain-based hospitality firm announced today that it had acquired 5 Bitcoin for its balance sheet with plans to significantly increase its allocations over time. Quote, our initiative towards becoming a Bitcoin treasury company reflects our forward-thinking, oh God, here comes the suit speak, our forward-thinking approach and dedication to maximizing shareholder value. There it is. Maximizing shareholder value, forward-thinking approach. Man, those are, the second you see that, you should just stop listening. I'm not even going to read the rest of this mission statement because it's going to be suit speak. But the decision makes Abraj not only the first in Bahrain, but also in the GCC and wider Middle East to publicly hold Bitcoin on its balance sheet. The investment is a direct response to growing institutional interest in Bitcoin and comes amid what appears to be a regional shift towards digital assets. Abraj's strategic partner in the transition is 10x Capital, which is a New York-based investment firm with a strong track record in digital asset treasury management. I've never heard of them before, but 10x previously advised companies like Nakamoto on its $710 million Bitcoin-focused financing round. Y'all should just use Unchained Capital. Quote, I'd like to congratulate Abdallah Issa and the team at Abraj for adopting Bitcoin at the corporate treasury level, finally enabling anyone in the GCC with a brokerage account to gain Bitcoin exposure, said Hans Thomas, CEO of 10x Capital. Quote, Bahrain continues to be a leader in the Middle East in Bitcoin adoption, backed by a forward-thinking regulatory framework. Forward-thinking. I'm so forward. I think so forward, I'm over my skis. Thomas added, quote, the GCC, with a combined GDP of $2.2 trillion and over $6 trillion in sovereign wealth funds, has until now lacked a publicly listed Bitcoin treasury company like Strategy, Tesla, or Metaplanet. And that changes today with Abraj's historic Bitcoin purchase. I'm not sure if it's actually historic, but hey, more power to you. Abraj said that it will continue to work under the regulatory oversight of the Central Bank of Bahrain and has pledged full compliance. Oh, pledged. I pledge allegiance with all digital transaction laws. Oh, God, this is just amazing. Pledge. We need to stop using language like this. This is not King Arthur times. Guinevere isn't hanging on the, out of the tower, throwing, handkerchiefs down to her knight in shining armor and shit like that. We need to stop using shit like pledge. Yes, I said Pledge of Allegiance as a kid in all my schools. I never really had hackles raise up on my neck then, but lately seeing a bunch of shit like this and the crap that we're seeing around the world, the word's starting to get a little worn. I'm just saying, I'm just saying, man. But let's see. The company will adopt robust custody, risk management, and governance protocols for its Bitcoin holdings. Of course, they give no details as to what that is, but it doesn't matter. It is a restaurant. It is Bahrain. It is the Middle East, and they're apparently the first company that is publicly traded in the region on their stock exchange, which is nothing to sneeze at. $6 trillion in sovereign wealth funds and $2.2 trillion in combined GDP. This is, it's only 5 Bitcoin. I get it. But think about it this way. Everybody can't be a Saylor because, they're not psychotic. I don't mean to pick, I'm not picking on Saylor. I really am not. But think of it in terms of farming. If you've listened to this show for any length of time whatsoever, you know that I'm interested in agriculture and ranching. And soil, clearly, because that's without soil, you're not doing either farming nor ranching, and you're going to it's not going to matter. But there's a lot of regenerative practices that you can use on your farm and ranch to increase the health of your soil. And by doing that, you actually increase the amount of food you can grow, whether it be for humans or for animals like cows on a ranch. However, if you walk up to a farmer that's a conventional farmer today and say, hey, you and your 1,000 acres, by the way, 1,000 acres, for those of you who don't know, it's 1.5 miles long by 1.5 miles wide plot of land, roughly. That's about 1,000 acres. That's a lot of land. And there will be farmers like where I live in the Palouse region of Eastern Washington. You'll have a lot of farmers that are basically on either 1,000 or 1,500 acres, and they either own it or they lease it, but it's just all wheat or rye or barley or soybean or whatever. They grow a lot of lentils out here too. They also grow a lot of garbanzo beans. But if you were to walk up to them and say, hey, you need to stop doing what you're doing. You need to go regenerative agriculture all the way. You need to plant cover crops, and you need to stop using herbicides. You need to stop using pesticides. You need to stop tilling your ground. You need to make no more than 2 passes with a tractor, and you do all this shit. If you convince a farmer to do that, you know what's going to happen to that farmer? The farmer's going to go out of business, and their family's going to have to sell the land if they own it, or they're going to have to give up their lease if they don't own it, and they're going to have to go find something else to do because you basically just destroyed that farmer's livelihood. And this is coming from somebody who appreciates regenerative agriculture, and I cannot stand conventional agriculture. So what do? How can you... And the reason why they'll fail is because they won't get any yield. It takes a structured approach to flip your farm over from conventional chemical-based agriculture to a regenerative-based agriculture. Will it work? Yeah, but you can't do it in one season. And that's what I'm getting at. Oh, it was only 5 Bitcoin. Yeah, even I'm having that kind of allergic reaction. It's only 5 Bitcoin. What you want to do is you want to take that approach. You want to dip your toe in the water. And if you're a farmer or rancher, what you do is you sacrifice a couple of acres of your farm or your ranch, and you turn that over to regenerative agriculture, and you watch it for 3 years, and you watch what it does. And when you see what it actually does, all of a sudden you want to apply that to your other 1,000 acres. I won't have to tell you again. You'll do it all by yourself. As long as you can say an acre's not going to kill me. I can do an acre. I can do that. That's what these guys are doing. And that's why I don't give them I don't really have any problems with them only getting 5 Bitcoin. It's going to be fine, guys. It really is. It's going to be fine. Now, moving on, Metaplanet acquires 1,004 more Bitcoin, raising its total holdings to 7,800 BTC. So they're moving on. Strategy has also purchased Bitcoin as of all last week. They've added an additional $765 million worth of Bitcoin because Strategy acquired that they acquired 7,390 Bitcoin for that price, according to Form 8K filed with the SEC on Monday as the company continues its aggressive Bitcoin accumulation strategy. So all last week, Michael Saylor and Strategy was buying more Bitcoin. And what happened when we saw all this? The price of Bitcoin hit $107,000 and immediately fell to 102. So basically, we had a $5,500 candle in the direction that we do not like almost immediately. And I cannot iterate enough how many times I see on both on nostr and on Twitter, how many people are saying the same thing. How is it that all these people can be buying so much Bitcoin and the price barely moves? I wish I had an answer for you. I really do. Because even I'm starting to fall in line with that thinking. To the point that I start going, well, maybe it's paper Bitcoin. Or maybe there's some kind of suppression tactic with the use of futures contracts. I don't know. Because I see this amount of Bitcoin going to Strategy and to Metaplanet. Oh, and by the way, Metaplanet, the whole Metaplanet thing, Hold on. I got to go find it again. Sorry, hold on. I lost it. Okay, here it is. I found it again. This is about Metaplanet. So we're backing up. Okay, so we're done with strategy. By the way, we don't need to go through the history of what strategy was doing like 4 years ago, like for the 8th time. This is interesting though. About Metaplanet, over the past 30 days alone, Metaplanet added 3,275 Bitcoin, aggressively expanding its treasury amid a 189.1% year-to-date yield on Bitcoin. Metaplanet strategy has delivered significant returns to its shareholders, with the BTC yield reaching almost 50% quarter to date. And since July 2024, the firm has reported quarterly BTC yields of 41%, 309%, 95%, and 47%, driving strong Bitcoin-based performance even amid capital market activities and dilution from share issuances. So Metaplanet at this point posted its best quarter ever. This is, if you remember on Friday or Thursday, I can't remember which, I was talking about Metaplanet kind of being a failing hotel management company. And like at one point or another, I'm sure they were doing okay. They probably had like a lot of assets in hotels, and they were managing stuff, and they had contracts, and they had like money coming in, and they were doing okay, but they just started going south like a duck in winter. And then they found Bitcoin and started saying, screw it, we'll buy it with whatever cash we got on hand. And then they started printing debt instruments because it was working, so they could buy more Bitcoin. So they definitely took a page out of Michael Saylor's playbook. And they have posted their best quarter ever. In the first quarter of fiscal year 2025, their revenue hit 877 million yen. That was up 8% quarter over quarter. Their operating profit hit 593 million yen. That was up 11%. Assets jumped 81% to 55 billion yen worth, and net assets surged 197% to 50.4 billion yen. No one can say that this strategy doesn't seem to work. Now, people will say, yeah, that's in the short term. What happens when the bear market happens? Well, that's going to be a whole other raft of news stories, isn't it? But we're not there yet. And I don't even know if we hit a bear market, and if we do, I don't know when. I mean, surely at one point or another a bear market comes in. I'm alluding to, have we broken the 4-year cycle? I don't know. I have no idea if this $107,000 Bitcoin that we saw yesterday afternoon actually signals the top. I don't know. Honestly, I'm exhausted by trying to care about it. So I'm just not going to worry about it. But the best quarter ever for a company that was essentially a failing hotel management company, that's not bad, considering all they did was buy Bitcoin. I hope they're able to pay back the debt that they used to buy that Bitcoin. But meanwhile, Strategy has their own hands full, because the co-founder and Strategy, they both face class action lawsuits involving alleged federal securities law violations. So here we go. By the way, this is written by Sarah Wynn from theblock.co. Bitcoin Treasury Company Strategy and Michael Saylor are facing a class action lawsuit from investors who say the company made, quote, materially false and misleading statements about its profitability. Through the law firm Pomerantz LLP, Anna Hamza, along with other investors, filed that lawsuit on Friday in U.S. District Court for the Eastern District of Virginia, and the lawsuit alleges that Strategy embellished its forecasted profitability of its Bitcoin-focused investment strategy and risks tied to Bitcoin's volatility, and is focused on the period between April of 2024 and April of 2025. Quote, as a result of defendants' wrongful acts and omissions, and the precipitous decline in the market value of the company's securities, plaintiff and other class members have suffered significant losses and damages, according to the complaint. CEO Fong Li and Chief Financial Officer Andrew Kang are also listed as defendants. As of Monday, Strategy says it holds a total of 576,230 Bitcoin worth over $59 billion, bought at an average price of 69,726 per coin for a total of around $40.2 billion. Bitcoin's price has ebbed and flowed over the past few weeks, and as of Monday morning was hovering close to 104,000. The lawsuit says Strategy adopted Financial Accounting Standards Board standards at the beginning of 2025, which requires public companies to, quote, measure their crypto assets at fair value in their financial statements, with gains and losses from changes in their fair value of those assets recognized in net income in each reporting period, called ASU 2023-08. Before that, Strategy used a different model, which meant that the firm just needed to recognize impairments in the event of price depreciations and would not mark up for price increase unless the assets were actually sold, according to the complaint. Quote, defendants consistently provided rosy assessments of Strategy's performance as a Bitcoin treasury company following its adoption of ASU 2023-08. They did this in part by reporting and projecting positive BTC yield, BTC gain, and BTC dollar value gain results while omitting the immense losses the company could realize on its Bitcoin assets after accounting for these assets under a fair value accounting methodology, the investors have alleged. Strategy has not responded. Quote, the complaint seeks unspecified damages to the class, interest, attorney's fees, costs, and other relief. The firm said, quote, we intend to vigorously defend against these claims. At the time, we cannot predict the outcome or provide a reasonable estimate or range of estimates of the possible outcome or loss, if any, in this matter. This is actually a fairly serious lawsuit, and if they win, could set a pretty nasty precedent going forward. However, it really boils down to exactly what did MicroStrategy do when they reported their numbers in April. What I saw was a pretty, okay, I'm not Ernst & Young. I don't work for, like one of the big four accounting firms, right? But I can read a balance sheet. And they reported some pretty fundamental losses. I mean, their revenue was like non-existent. Their operating costs soared. That was all in their statements. So I'm not exactly sure what the defendant class is looking at. I hope that more information on this story comes out, and when it does, I will let you know. Last up for the day, El Salvador's Bitcoin bet swells to $644 million as rally boosts sovereign holdings. Vismaya V from Decrypt is writing this one. Bitcoin's rally has lifted the value of El Salvador's holdings as the asset continues to prove itself a savvy investment for Central America's smallest nation. President Bukele shared a screenshot Sunday showcasing how the country's Bitcoin holdings were worth over $644 million following an increase of 30 Bitcoin last month. I guess he is still buying, in fact, 1 Bitcoin a day. Though the total has since retraced slightly to around 637 million, El Salvador's Bitcoin National Office says its stash has ballooned more than $137 million over the past 30 days, and the boost comes as Bitcoin began flirting with all-time highs on Sunday, briefly touching 106,005 before settling to 103,172. Quote, Bitcoin is rallying due to a combination of macro relief, strong ETF inflows, and growing expectations that the Fed will maintain policy flexibility amid softening economic data. Bitfinex analyst shared in a note for Decrypt. El Salvador has quietly continued accumulating Bitcoin despite securing a $1.4 billion International Monetary Fund loan in December, which required rolling back public sector crypto involvement. So the thing here is that El Salvador's bet is like Metaplanet is doing very, very well. Strategy from an asset on book standpoint, is also doing very, very well. Their business model is in the shitter. But as far as if they're just going to float on their treasury, because, like Michael was saying, it's time to start using your treasury as a vehicle for wealth creation. And nobody's really ever done that before, because everybody relies on their revenue model. There's nothing wrong with that. That's the way business has been done for centuries. So why change now? Not really a whole lot of people have actually leveraged their balance sheet in such a way, except for people like hedge funds, because that's their business, is leveraging money. Warren Buffett is a master at leveraging money. I am actually kind of surprised that it's taken this long for this kind of balance sheet leverage to come into play at the corporate level on companies that are not actually hedge funds. They have a completely, like strategy. They build software, or they used to build software. I'm pretty sure that they don't anymore, except they are coming out with an AI, product, but we'll have to see if they actually release that thing. It's just a rumor at this point, as far as I'm concerned. Metaplanet managed hotels. Like Similar Scientific, they build medical devices. That's their model. And companies like this, generally speaking, they just keep cash on the balance sheet to weather storms. They never really leverage it. And I kind of can't believe that it's really Mike that came along and said, not only are we going to start using our balance sheet to do shit with, we're going to do it with Bitcoin. And that leads me to my final note about Steak and Shake. Because if you noticed in the story that I read to you, Steak and Shake is immediately converting upon receipt in an automatic fashion Bitcoin directly to United States dollars. And people, I've seen people really kind of lose their mind on that. So, they're automatically selling their Bitcoin. Okay, so again, I'm not going to be able to go tell a conventional farmer to flip their 1,000 acres to regen ag, because if they do, they're going to die. I would be bereft morally in doing that, in trying to convince a farmer to flip their field in one single season. Like, hey, after a harvest this year, you're going to go regen, and somehow or another, I talk real pretty, and the farmer believes me, and then lo and behold, next year the whole farm's regen. Yeah, going to die. That farm's going to fail. It's going to have no yield, zero yield. If it has any yield at all, it won't be enough to make bill. All right, so I can't expect Steak and Shake to not do the test. Sacrifice a single acre. Hell, sacrifice a half acre. That's half a football field. You'd be able to see shit happen on a half a football field if you were like not applying pesticides and herbicides and you watch it for 3 years. That's going to be noticeable. So what happens if enough people start going to Steak and Shake that they go, well, how about we do this? Instead of immediate conversion of 100% of everything that we get, we peel off, 1% and keep that as actual Bitcoin on the balance sheet. And let's just see what it does. And what if it does well? Of course, then again, the other question is, what if it does poorly? But you got to start somewhere. The 5 Bitcoin, sorry, there's a trash truck outside. Yeah, go away. What if the farmer just does a half acre? What if, the Middle Eastern restaurant just does 5 Bitcoin? What if Steak and Shake just decides to accept Bitcoin through Lightning, make it easy as shit for all? I mean, honestly, they probably don't really even need to train their not customers, but their employees very much on how this works, because it's all automated through their kiosk, through the cashier screen, right? It just presents you with a QR code. You do it. That's all done on the back end on Steak and Shakes, whoever's doing their networking IT stuff, right? This is not that difficult, right? It's not that difficult to sacrifice a half acre. It's what you see grow out of that. That's what's going to make the difference. So if for whatever reason you feel like going and getting a burger and you want to get it at Steak and Shake and you want to spend your Bitcoin, don't let anybody make you feel bad because you spent your Bitcoin, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.